Happy Monday, everybody. I hope you had a great weekend. Another big week to report on. So let's recap last week. And this week promises to be very newsworthy, at least by the end of the week. So more on that in just a bit. Today is October 28th, 2024, and this is your Monday market update. Stocks had a mixed day on Monday with concerns all over the place. Fed policy, eco data, and earnings. I'm sure the geopolitics and politics all played a part in that, but not as much on Monday. U.S. stocks took a breather as the 10-year Treasury yield surged to a three-month high, hitting 4.17%, which did put pressure on the broader market. This rise in yields was driven by the combination of higher oil prices, expectations for a higher for longer Fed rate outlook, and restrained dovish signals from recent Fed speeches. Interest-sensitive sectors like real estate took a hit as rising yields weighed heavily on stocks tied to borrowing costs. Real estate fell 2.1%, while small caps were also sharply lower, with the Russell 2000 dropping over 1.5%. Financials, healthcare, utilities, they all slipped. Globally, China's central bank did deliver a larger than expected rate cut aimed at stimulating its economy. This added some support to global sentiment, but it couldn't offset the impact of rising U.S. yields. Meanwhile, Germany's softer inflation reports fueled expectations of a potential rate cut from the European Central Bank, but this had also limited influence on the U.S. markets. Earnings season is picking up with a strong focus on transportation stocks during the week. GM, Boeing, and Tesla. We'll see how that goes. Tech was only one sector to finish positive on the day, up about 0.5%. More AI strength. Overall, high yields and profit taking were the main drivers. By the end of the day, the Dow was down the most, a bit over 0.75%. S&P down almost 0.25%. And the Nasdaq was up a bit, about 0.25% in the green. Tuesday, we did see markets open a bit lower, carried by the downside momentum along with the continued increase in Treasury yields. Overall, that did give way to a steady day. Earnings moved things up. GE was down almost 10%. Lockheed Martin down 6%. Tech stocks were in the green again, but nothing to write home about it. We did hear some bigger news items, and that Goldman Sachs has released a report outlining their case that the S&P 500 will turn an average of at best 3% per year over the next 10 years. If you want to discuss that, please call me. I am not on that train. Also heard from Janet Yellen, remember her, Treasury Secretary, talking about the danger of the rising debt load the U.S. has. And as I mentioned, this will bring more bonds to the market unless taxes go up substantially to cover that. And that's very odd that that's going to happen. And that will bring yields higher. And we are seeing what markets think about that. Overall, markets seem to be showing some exhaustion, and it was not a real mover of a day. The Dow closed nearly flat, S&P also flat, down slightly, and the Nasdaq was up less than 0.25%. Markets opened lower on Wednesday and accelerated later in the day. Stocks, bonds, and gold all traded lower. Still looks like exhaustion. Earnings did not help. McDonald's down almost 10%, Starbucks down 3%. Geopolitics also not helpful as a new hotspot, our old friend North Korea, are as Russia and China supporting Iran. And you can imagine that doesn't keep the Middle East concerns quiet. The market tried to get its footing, but a bad 20-year Treasury auction turned things lower again. Slight dip buying took markets off the lows to close the day. Dow and S&P both down about 1%, Nasdaq down about 1.5%. After three straight rough days, the markets did gap higher on Thursday, led by solid earnings from Tesla, which was up over 20% in one day. So eco data was Goldilocks. Growth without inflation. Can you say soft landing? Talking about it again. Treasury yield steadied a bit. In addition to Tesla, UPS had solid numbers. Recall that last week I told you that UPS is known as a good read on the economy. If you ship it, good chances UPS is going to touch it. Markets rolled over late, seemingly from the traders and technicians. They did stabilize the market, but closed below the market highs. By the end of the day, the Dow was down about 1/3%, S&P up about 1/4%, and the Nasdaq was up about 0.75%. Recall, Tesla up 20%, and that influences those indices. Stocks opened slightly higher on Friday, despite some big name downgrades before the bell, including one that everyone seems to love, Apple. Apple was downgraded as news hit the tape with reports from an outside vendor that they have cut orders for new iPhones due to slowing demand. I will note these leaks, they come every now and then. They may or may not be true. You can imagine that Apple has a pretty strong stance on corporate information security. And would you want to answer that phone call from Tim Cook if your company was the source? Just saying. Bristol Myers also got a downgrade. Overall, it was a mixed market. Dow suffered the most, down over 0.5% on the day. S&P just slightly lower, but as people jump back into tech, the Nasdaq was up about 0.5% on the day. Many of the mega cap tech stocks will release earnings this week, so we'll see how that goes. For the week, the Dow and the S&P both snapped a 6-week winning streak. Dow was down about 2.75% on the week. S&P down about 1% on the week. Nasdaq got weekly gain number 7 in a row, up about 0.25%. Let's look into the week ahead. The menu is a crazy full one. Earnings will be front and center. You know how I feel about that. I think this is the true key to the markets in the long term. Short term is noise, but this is the signal. Google, Microsoft, Meta, Apple, Amazon, full enough plate for you. Just add Exxon and Chevron, Intel, MasterCard, and Merck also. Not to be alone, earnings will share the limelight with PC Inflation Gauge. Again, you know where I stand on this. Not an event at this time, but it will be watched. We'll also get GDP and some housing data. Big eco data will be jobs on Friday. The Fed says that this is their focus, so they do have a meeting coming up, of course, right after the elections. We will get JOLTS on Tuesday, ADP on Wednesday, and jobless claims on Thursday, just to wrap up the labor news. By the way, elections are coming, in case you didn't know that. What is missing? Yes, blackout period for the Fed heads. So we won't hear from a lot of them, but not sure how. But Fed head Logan from Dallas will get a short welcoming remarks to a conference on Friday. Expect nothing from that one. So as you can see, this will be a packed week. Earnings, I'd say you can't get bigger than these. Eco data, big for growth and labor, and politics. Elections almost here. Don't discount geopolitics to coincide with our election also. So as always, have a plan, stick to it, focus on our goals, and let's keep planning for year end. Please call me and we'll review it. For now, have a great week. We'll see you soon.